Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the host, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Welcome to another episode of Wealth Coffee Chats with myself, Alex. And I don't know if you're waking up to the news or whether you were up to date yesterday and saw the release, but the inflation is heating up. The numbers came out. We're sitting at 3.8% for the change in 1 month from September to October. Why is it important to you? Let's have a chat and have a look at what impacts it might have on you as an investment. An investor and a mortgage holder. Let's have a look at it all. So the other thing I want to mention is the unemployment rate came out as well, and that's actually dropped from 4.5% to 4.4%. Not a huge drop, but when we look at the numbers, I think it will make a bit of sense as to why it's important. So you might have heard me from previous Wealth Coffee Chats where I talk about inflation and I talk about unemployment rate and how they work hand in hand together and what that may mean for future interest rates, which is predominantly the main drivers for the IBA's decision. So let's have a quick look at the website, the IBA website, and have a look at what is going on here. All right, cool. Can you guys see this? Yep, perfect. So if you're listening into this, I'm just sharing the RBA website with the graph of historical inflation numbers. So we can see that the target rate, as we all know, for the RBA is between 2 and 3%. Right. So you can see, especially in the last sort of 5 years, that has gone out of the norm and it's sitting in way above the band where it should be. Right. So we had that huge spike, sort of mid 22. Obviously, that increased the interest rates at the same time, and now that had a positive effect, dropped us down to two, sort of early twos, mid twos, and that was a good outcome. And now we're kind of going back up in the inflation rate. So we can see that from the table here. So for the last sort of 7-8 months, we're sitting nice and neatly around the mid to low twos on the inflation scale. But then the last sort of 4 months from July, we're seeing a steady increase in the inflation rate. So which is not ideal, right? Because when this started to come through, the sentiment around the cuts to the interest rates, which has been set by a few people, a few economists, that's now starting to die down, and essentially, the conversation is changing to, okay, well, perhaps there's no more interest rate cuts, and perhaps we need to look at, again, increasing the interest rates, right? Because if this is going to run away and we're going to see that spike go up again, well, be ready for the interest rate increases again. So let's just quickly rehash what is inflation. Like, in simple terms, is just an increase to in prices, right? So having a look at where and what has contributed to that. Let me just have a look. All right, so what have we got? We've got, let me share another screen where there's an actual table there with the little numbers and whatnot. So here we go. So let's have a look at it. All right. So housing up 5.9% over the year. So I guess, looking at where the prices are and how hot the property market is, not surprising. Let's have a look at electricity. Obviously, we spoke about electricity before. There were a lot of rebates that were sitting in there that were priced in, but those are now finishing up. So I know in Victoria that finished up, I think it was October. So that's now no longer in there. Services, so and that sits around 3.9%. So this is this is just not like your fuel and whatnot prices that are going up, but it looks like it's up across the board. You're looking at it. Insurance seems to have come down a little bit, so I think that's settled in quite a bit. So I think that would be a key sort of metric for the RBA to look at when they meet at their next meeting. So I guess, with the interest rates, again, we're speculating here, but it looks like the further cuts will be put on hold for a little while now. Maybe even a potential conversation about a interest rate hike sort of sometime next year, maybe mid next year, if the inflation continues the way it is currently. So what does that mean for for the rest of the market? In terms of the share market, typically they price in these sort of cuts even though they haven't happened yet. So from the last reading, the market's kind of retrieved back on what they're expecting to the market to do over the next sort of 6 to 12 months, and I think that this will be another potential pullback in the market over the next couple of days as the information gets processed and further discussions are had. So equities will likely stay where they are, maybe even pull back a bit. Let's see what else we've got. Oh yeah, bonds. So your defensive assets, your term deposits, etc. So again, you're probably going to sit on a higher term deposits for a little bit longer, which is good if you're a defensive type of investor. Um, the bonds, which is like the next level up from there, almost. That's going to stay around the mid fours in terms of the interest rate. Which is quite good. So if you don't want to take any risk and you sit in bonds, well, then that's a good that's sort of good news for you. Aussie dollar is up, so sitting around 60%, 60 cents. That's pretty good. But you got to consider what impact does that have on the overall economy. In terms of imports, should be quite good. Sorry, imports should be should be good. Should be good. Exports probably not as good because the dollar is up, so the cost of exporting will be higher. But it needs to change at some point. Let's have a look what else we've got there. Property, like I said, we're still facing the supply demand issues. So even if the interest rates stay where they are, or even if they creep up a bit, then ultimately I think the demand for that space will be relatively strong for a little while until we solve the housing issue and housing supply. So I guess one thing that you probably want to look at there is, have a look at your current interest rates, have a look at your current mortgage and loans, and just stress test it a bit. Go up maybe 0.5% to 1%, see how that's going to impact on your cash flow. I know we're going into Christmas season, a bit of a silly season. Holidays, presents, all these sort of things. So a lot of expenses are coming up. So you just want to be prepared for 2026, knowing that these things are brewing in the background. In terms of the super, largely, everyone is invested in, at least 60 to 70% in shares, unless you've gone in there and you've done something to change that. But typically, that would be your average allocation within that space. So, it's going to be, a bit of a flat line probably for the next couple of months. So don't expect too much there. But also, if you're contributing into it through salary sacrifice on top of your normal super contributions, then that is also I guess a positive as well, because you're buying into the investments at a regular and average pricing, which is quite cool. So look, it's a significant sort of reading here from the RBA with ABS, so Australian Bureau of Statistics. So which should be followed, because now we're going to kind of have a couple of months of a break, essentially, depending which industry you are in. The signs are not looking all that great if you've got debt, because the interest rates are likely to be reviewed, and if it goes that way, there'll be no hesitation from the RBA to increase the interest rates, because the unemployment rate, like I mentioned earlier at the start of this episode, employment rate is coming down, right? So it's gone down from 4.5 to 4.4. Doesn't seem like a lot, just a 0.1%. However, the trend is there, right? So we can see that it's coming down, whereas the inflation rate is going up. And if the RBA looks at it from two sides, they'll say, okay, well, unemployment is now starting to get under control, or at least, there's signs of it, whereas inflation is starting to get away from us. So, let's spin it now and, get the interest rates back up by, whatever, 0.25, 0.5, probably 0.25 to be honest, just to sort of put a lid on it. So, that could easily happen. So don't be surprised if it doesn't. Again, everyday goods are starting to add up in terms of costs, so you got to consider that as well. But yeah, moving into Christmas, into start of 2026, just be aware of these things, prepare, and hopefully this was useful to you guys. Again, last point, inflation is up 3.8%. So let's see what happens next. Thanks, guys. I appreciate you jumping on, and I'll see you all next week. Thank you. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.